What if I told you the British pound, once the most powerful currency in the world, is slowly losing its strength? The same pound that ruled global trade during the British Empire, the same currency that stood stronger than the US dollar for decades, is now under serious pressure. Why is GBP falling? Is the UK economy in trouble? And most importantly, what happens next? If you trade Forex, invest in UK stocks, or live in Britain, this video might directly affect your money. Let's break it down. The British pound has faced repeated pressure over the past few years. We've seen sharp drops during Brexit, uncertainty, COVID crisis, the 2022 mini-budget crisis, rising inflation shock, slowing UK economic growth. At one point, the pound even nearly reached parity with the US dollar, something unthinkable just 15 years ago. So, what's really happening? There are four major forces pushing the pound down. 1. UK government debt is rising fast. Let's start with debt. The UK's national debt is now extremely high compared to historical levels. Government borrowing exploded after COVID stimulus packages, energy price support schemes, public sector wage increases, rising healthcare and pension costs. When a country carries too much debt, investors begin to worry. Why? Because debt must be financed. And if markets believe a country may struggle to repay or manage that debt, they demand higher interest rates, or they move their money elsewhere. And global investors always compare countries. If the US looks safer, or Europe looks more stable, capital flows there instead of the UK. And when money leaves the UK, the pound falls. 2. Inflation shock and cost of living crisis. Next, inflation. The UK experienced one of the highest inflation rates among developed economies after the pandemic. Energy prices surged, food prices jumped, rent increased, mortgage costs exploded. At one point, UK inflation was significantly higher than the US and much of Europe. High inflation damages a currency for two reasons. It reduces purchasing power and it signals economic instability. If your currency buys less every year, global investors lose confidence. And remember, currencies are based on confidence. When confidence drops, so does the pound. 3. Interest rates, the double-edged sword. Now here's where things get interesting. The Bank of England raised interest rates aggressively to fight inflation. Higher interest rates usually strengthen a currency. So why didn't the pound recover strongly? Because raising rates too fast creates another problem: economic slowdown. Higher interest rates mean more expensive mortgages, slower housing market, lower consumer spending, business investment decline, and the UK economy is already fragile. So markets started asking, is Britain heading toward recession? Investors believe growth will weaken. They avoid that currency, even if interest rates are high. That's exactly what happened. The UK got stuck between fighting inflation and protecting economic growth, and that balancing act created uncertainty, and markets hate uncertainty. 4. Comparison with the US dollar and euro. Currencies don't move alone. They move relative to others. Let's compare. The US dollar became extremely strong because the US economy recovered faster post-COVID. The Federal Reserve raised rates aggressively. The US remains the global reserve currency. Investors see America as a safe haven. During global uncertainty, money flows into the dollar. And when the dollar strengthens, GBP, USD falls. Simple math. The euro also struggled with inflation and energy issues. But Europe benefits from a larger, combined economy, stronger trade surplus in certain regions, less political volatility compared to post-Brexit UK. Brexit reduced the UK's trade efficiency with Europe. More trade friction equals slower exports equals weaker currency pressure. So compared to both the dollar and the euro, the pound faces unique structural challenges. The Brexit effect still not over. Many people think Brexit is old news. It's not. Brexit changed trade agreements, supply chains, investment flows, immigration patterns. London was once the uncontested financial capital of Europe. Now some banking and financial activity has shifted to Paris, Frankfurt, and Amsterdam. Less foreign investment equals less demand for pounds. And that matters. Why Forex traders care? If you're in Forex, GBP pairs are among the most volatile in the world. GBP, USD, GBP, JPY, EUR, GBP. The pound moves aggressively during Bank of England speeches. Inflation reports, budget announcements, political instability. Volatility creates opportunity, but also risk. Professional traders watch UK CPI data, GDP growth, unemployment, interest rate, expectations, US Federal Reserve decisions. Because GBP strength is not just about Britain. It's about relative strength. What happens next? Now, the big question. Is the pound going to crash further or recover? Here are 3 possible scenarios. Scenario 1. Gradual stabilization. If inflation continues falling, the Bank of England cuts rates slowly, the UK avoids recession. Then we could see gradual stabilization. Not explosive growth, but steady recovery. This would attract long-term investors back into UK assets. Scenario 2. Recession risk. If the UK economy contracts significantly, rising unemployment, housing market decline, weak consumer spending. Then the pound could face renewed pressure. Markets would price in weaker growth. GBP would likely fall against USD. Scenario 3. Dollar weakens globally. Here's something many people ignore. Sometimes it's not about the pound rising. It's about the dollar falling. If the US Federal Reserve starts cutting rates aggressively, if US growth slows sharply, then the dollar could weaken globally. And GBP USD might rise even if the UK economy is just average. Remember, currencies are relative battles. The bigger picture. Let's zoom out. The UK is still one of the largest economies in the world. A global financial center, home to major multinational corporations, a stable, democratic country. The pound is not collapsing. It's adjusting to a new global order. Post-Brexit reality, post-pandemic economics, higher debt era, slower growth environment. The days of automatic dominance are over. Now the UK must compete. Warning for investors. If you live in the UK, imported goods may remain expensive. Travel abroad costs more when GBP is weak. Inflation risk still exists. If you invest, currency diversification matters. USD assets hedge GBP weakness. Gold often performs well during currency instability. And if you trade Forex, volatility is opportunity, but risk management is survival. Final thought. The British pound's decline is not just about charts, debt, inflation, growth, political stability, global competition. The real question isn't, is the pound falling? The real question is, can Britain rebuild investor confidence? Because, in the world of currencies, confidence is everything. What do you think? Will the pound recover in the next 2 years? Or are we heading toward deeper economic challenges? Comment below. If you want more powerful breakdowns on global currencies, wealth wars, economic battles, Forex strategy, UK versus US financial comparisons, make sure you subscribe, because money doesn't wait, and neither should you.